Yeah, I'm losing my edge.
Today, I want to talk about scalping futures with ranges. This is something that we get a lot of feedback on because you and I like to think I've been doing this now for 4 years. You've been doing this for a couple of years before that, and then you have a huge education background in futures before even coming to Tasty Trade and now the small exchange. But one of the big questions that we get is, okay, you did a great job with mechanics. You did a great job getting me on board with what gold futures are and how they're sized, and what equity futures are and how they're sized. But there's a huge barrier to, okay, how do I actually get in here? What am I supposed to be doing with scalping futures? And it's tough because everybody wants us to just open up a trading platform and be like, all right, this is how you buy and sell and you make money. But it's not that simple, and everybody has their own way of doing things. And it's one of these things that we can give you some ideas. And today I want to give one of the more basic strategies for scalping futures. But at the end of the day, you need to get in there and feel things out for yourself. Oh, this contract is too big. Oh, this one is rightly sized. And we hope at the small exchange, we provide those correctly sized futures for you to try stuff out without really breaking the bank. But it's one of those things that you can talk about, but you have to get in there and do it at some point and establish your own strategy, right? Like how many times, and it's not a bad question. I remember when I showed up at the board of trade for the first, 6 months or so, I was trading on a simulator, and they're finally like, all right, Frank, like you need to jump in and start doing some stuff. We'll give you some 2 years, which is the slowest moving treasury piece. Just click around, find a strategy that works for you, find some ranges that work for you. And that's how you discover this stuff. But until then, it's like, it's so hard, isn't it, Pete, to be like, you always want to be like, oh, well, someone just tell me what I should be doing, like give me the strategy. It's not that simple.
No, and it's not, because strategies are really specific to your risk tolerance, what you're comfortable with. Remember, risk and mechanics are critical, and everyone's risk tolerance and mechanics are different. We're all, for the most part, all of us are all human beings, and by nature, we're risk-averse animals. And what do we do every day? We assume risk. So the only way we can do that productively is to look at opportunity that fits us, along with mechanics that are reasonable around it. So you're absolutely right. And I think everyone in their career, as you just mentioned, has spent some time on a sim. Sim's a great way to start to understand a little bit around movement, a little bit around product synergy, which I mean, if gold moves by this amount, silver tends to do this. But let's not kid ourselves. A simulated environment, we kind of wake up, we look at it, it's like, oh, I'm down money. And then you forget to look for 2 days. It's like, oh, look at me, I'm back to making some. A sim environment is a great tool for some people, but we learn by doing. And unfortunately, sometimes we learn by losing. I think if you talk to any trader who has done this for a while, and I know, just speaking from I remember my losing days, my biggest losing days, far clearer than my best winning days. And it's because there was usually a material breakdown in mechanics or a lack of discipline.
Exactly.
So, and I think you'll find that within anyone who's done this for a period of time. So that is part of the process. The key is, how can I learn? And if I'm going to learn best by losing, none of us want to lose, but that's part of the process. We realize the 50-50 bet, directional bet, and how do we improve that? That's what we're going to discuss. And we always do discuss. But if I'm going to do that, how can I do that in a way where I can stay in the game? And the great issue, as we talked about strategy, mechanics, it's size. How do we get to a product that gives me size to let me stay in the game so I can build those profitable strategies matched with productive mechanics?
Yeah. And I'll always remember as well that for everybody, here's the thing, you're going to lose. Like there are going to be losing trades. It's the nature of the beast here, but doing it with products like the smalls that are smaller than those traditional products. I mean, I remember my first big lose, the biggest, still to this day, the biggest losing day I've ever had was when I was at the board of trade trading huge treasuries, and it was FOMC day. And I decided that, I've been trading overnight for a couple months, I can do this. And the market for 10 years was FOMC comes out, 10 years are up 10. I sell some, they're up 20. I sell some more, they're up a full point. I sell some more. And then the risk manager comes over and says, Frank, you've lost all the money that you could possibly lose today. Close everything out and have a good night, which
shut it down
for everyone else. And that's something that doesn't need to happen to everyone. While yes, you have to take there are losers that are going to occur in this game with these small products, even the small precious metals, Pete, that has seen the biggest outlier,
right?
Gold or silver's hit pretty much in their history. It's going back to 2 decades ago. These are the biggest moves we've seen in metals in the last 2 decades. With that, you've got this small precious metals contract that moved higher by $1,000 and then moved higher by another $1,000. In $2,000 is a huge move, but over the course of the biggest outlier month in this asset class, that coincides with tens of thousands of dollars in those traditional products. So you don't need to take those huge losses like I did to learn. And we have so much stuff on mechanics, so go back through those mechanics and all of that. But what we're getting at here, it's the same as anything. Like if you're studying to be a doctor or you're studying to do whatever, if you spend so much time in books and the classroom, but you don't actually open that trading platform or get off of that simulator, you're going to be, the armchair trader forever. It's like, oh, I've got all these opinions and I could be right, or, oh, I would have been right over the last week or over the last 24 hours. But instead, it's safer for me to have these opinions and not put them into practice. And getting closer into the heart of scalping here, Pete, what's your view on time frames in scalping? Because to me, it's usually a couple of minutes to a few hours. I'm not trying to hold what was deemed in my mind as a scalping trade for more than a trading session, right? What do you think about here?
I think so. I think sometimes that may go a little bit longer, but we've talked about the mechanics of your losses and gains don't have to be symmetrical. In other words, if I'm looking for 100, I can only risk 100. You need to determine what fits for you. That may be 2 to 1 or 1 to 3 or whatever you decide that works for you. But yeah, I would say that. And it's funny when you mentioned a few minutes, if you're trading something that has a propensity for movement, your location that you pick may go from reasonable to unreasonable, and you're going to have to manage it very quickly. And as long as you are accepting of that early into the process, what's great is when you do that, you let it go and you move on. Those don't stick with you. And it frees your bias to look at opportunity again. And we've talked about this so often, these shorter time frames are great engagement place, even if you want to build longer term strategies around them. There's nothing that says you can't. If you have a product that you can scale, and I don't be in a race to scale, but if I could trade 1 or 2 or 3 units up when I can sweat 1 unit of everything else, then that gives me the ability to scalp within my position. It's a whole new set of tools in your toolbox, and it's really empowering. So yes, scalps can range from several minutes to throughout the day. And I think for me, the hardest part around scalping was when I used to hold stuff through the evening, because it actually, by definition, it was still a scalp in my mind, but it became a different trade because you weren't involved with it on the same way you would be during the day. So I think speaking about it from a few minutes to a day is a great place to start your scalping journey.
And and where else we like to start with, so you got the timing piece down. It's short term for sure. What I always think of as the first baseline for anything that might be potentially interesting with scalping futures is what's the normal range for this market. And people look at the median move. If you look at absolute moves, both negative and positive, and you take the median, that's one thing. We look at the standard deviation of these data sets, and we usually look at just a few months in the past to see what's normal. Because Pete, the best, in my mind, the most interesting things are going to be when a market is at the lower end of its trading range for a day or the higher end. That's when you tend to see back and forth. And it's intuitive, right? Because no one really cares about a market that's having an inside day, something that's wrapped around unchanged, give or take a few dollars.
Right.
There's not really much to do with that. And you've seen with SPRE, this range has been about $1.20. But how much can I expect for movement to be outside of that, Pete? And so I crunched some numbers here and saw that the daily highs and lows usually came into a range of about 40 cents on top of that. So what I'm seeing is interesting here for short-term scalps in a product like /SPRE is, okay, has it moved beyond $1.20 to the upside or to the downside? And then what can I expect? What on average does it push in terms of a high or a low?
Right.
And that high or low is usually around 160. So that's giving you a baseline of where I see potential interesting trades is about $1.20.
Right.
How far it usually pushes beyond that, which is about 40 cents. And I can build some expectations for, okay, it's a big update in small precious metals here today. Where would I get in? Maybe I'm looking to get in 30, 40, 50 cents beyond that daily range. And what can I expect for maybe some give back is about 40 or 50 cents or $50 intraday. And I think that's an interesting way to start here. I think we'll continue the scalping futures conversation into the week as we are running out of time. But here are some ranges for the close to close, where these markets move. SM75 from close to close about $1.45, but usually tax on about 30 cents more from high to low of those daily ranges. Then you also have it for the small dollar products. So getting you a little bit comfortable with some expectations around scalping, when it might be interesting and what the time frames are.